degrees today, so it's much better.
Well, it's about 12 here today, so.
Yeah, it's lovely and sunny though. I don't think we can complain.
Yeah, no, actually, it's true. Yeah, it is sunny. Just a bit chilly now.
Yeah, here, of course, it's chilly, 37 degrees.
Yeah, 37 is something else.
Okay. So just one last, I will share my presentation once it's my turn, and then I will run it from myself. And then later on, once we're done, we will share it with the team, just in case you would like to, I don't know, share it with other participants, in case they don't look for it directly.
Yes, and I'll also convert. Best thing is to share any presentation in PDF format, just so that no person can, like amend it or change anything.
Yes, yes, and for the size as well.
Perfect.
And after the presentations, Jack, will you sort of hand over to me, or do you want me to just jump in straight away? Happy to do either.
Actually, Jill, on my program it says I thank the speakers, as I will do, and then hand over. So I'll probably chip in at the end of each of those sessions, but literally momentarily.
Great.
Perfect. Just give a few more minutes.
So, Mariam, just on prelims, you're going to say some housekeeping things, and then I'm just going to start when you hand over, yeah? There's no pause.
Yes, correct. So I'll just give housekeeping because it is a regular Microsoft Teams meeting. And then I'll hand it over to you and we can kickstart.
Very good.
Mariam, sorry, one quick question from me. Is there a holding slide that you're kicking off with, or are we just kind of starting without, and then Ali and Zaki are sharing slides as we go?
It's without, and then we're gonna go ahead and start, just because if we put a holding slide in this specific platform, it just takes over the whole screen, so no one will be able to see the speakers. Yeah.
Okay, no problem. Thanks.
No problem. We'll just give a few more minutes for more people to join in, and then we can start.
Okay.
Maya, I just wanted to drop a quick note. My colleague Henry's trying to get in, but he went through an Eventbrite Teams link. Is there 2 links for this session by chance?
No, there's only one. It's the one that I sent to all registered attendees from my email.
Okay, no problem. Thank you.
No problem. Good afternoon, everyone, and good morning to those joining in from abroad. Thank you all for joining today's session on FinTech and innovation opportunities in the MEASA region with DIFC, Investment Association, and Additive. Just would like to give some housekeeping rules before we start today's session. Can you please ensure all attendees to turn off their microphones and their cameras while the speakers are talking? And if you have any questions for our speakers, please insert them in the chat box option provided. Lastly, I would like to remind everyone that this webinar is being recorded and will be distributed at a later time post-event. Thank you all so much, and I'd like to introduce today's host, Jack Knight. Over to you, Jack. Thank you so much.
Thank you very much, Mariam, and hello, good morning to everyone in the UK, and good afternoon to those of you joining from Dubai and the Middle East. A very warm welcome to today's webinar. It's on FinTech and innovation opportunities in the Middle East, Africa, South Asia region. My name is Jack Knight. I'm Deputy CEO here at the IA, and I'm responsible for our international work on trade and investment. And one of the most exciting and productive things we at the IA have been doing since just before and throughout the pandemic period is setting up and growing the Engine Global Partner Program to connect buy-side FinTech hubs across the globe. This has been especially important in a time of restricted travel and when digital solutions have taken on an accelerated level of importance across the economy, in financial services, and of course, in investment management. I'm therefore delighted that today's webinar is a continuation of the collaboration between our organizations under the Global Partner Program. We're greatly looking forward to hearing from DIFC and wealth tech firm Additiv today. DIFC was one of the first to enter into this partnership with us. Now, I'm pleased to say over the past year, we have also connected with Singapore and Japan, as well as Hong Kong and Saudi Arabia more recently. There will be more to come, and please do look at the Engine website Global Partner Program page for more details. So for today's event, we're going to have 2 presentations from the Dubai side, followed by a Q&A, which will be moderated by Jill Painter, head of the IA Engine. Our first speaker is an old friend of the IA. Ali Hassan is Senior Representative for Europe and North America, DIFC Authority, and he's going to speak about opportunities in the market and DIFC's model to support tech innovation. In his current role, Ali supports the CEO in developing and promoting the insurance, banks and capital markets, and of course the investment management sector. He is also responsible for promoting and spreading awareness of DIFC's competitiveness and positioning regionally and globally. Our second speaker is a newer friend of the IA. Zaki Khoury is Managing Director of Additiv, who is going to share his experience setting up a wealth management fintech in Dubai. Zaki joined Additiv from Orange Business Services, where he was a senior manager based in Lebanon. He brings over 25 years of international experience in regional sales leadership, high-profile project supervision, strategic planning and business development within the IT and telecoms industry in the Middle East and North Africa region. Before we start, just to remind you that questions should be posted in the chat within MS Teams. Access that by clicking on the speech bubble icon at the top right of the window. As I say, the Q&A will be moderated by Jill Painter, but for the time being, may I hand over to today's first speaker, Ali Hassan.
Thanks so much, Jack, for those kind words, and thank you to you and Jill and Harry and the IA for partnering with us for today's event, and thank you, Zaki from Additiv for joining this. Delighted to be here, and let's try to make it as interactive as we can. As Jack has mentioned, I actually lead international coverage for the DIFC out of London. I've been back in London for 8 years, and I was based in Dubai for 8 years previous to that with the regulator, the DFSA within the DIFC. So I know the regulatory landscape very well. So what I do now, in essence, is to assist firms to export their expertise, products and solutions into the MEASA region, which for those that are unfamiliar is Middle East, Africa and South Asia. Over the last 2 years, we've seen tremendous growth in technology companies coming into the DIFC as tech meets finance in more and more ways, right? And our future of finance strategy aims to optimize what we offer in terms of support, what our ecosystem can do for technology companies as we play our part in the shift to the digital economy of the future. So let me take some time just to share some views with supporting data on how we see the market opportunity developing with a focus on wealth tech, share some trends that we're seeing from our side, and then looking at what does market entry look like for firms that are interested in the region. Let me just share my screen. Okay, you should see that.
Yeah. Yes.
Thank you. So looking at that market opportunity, I mean, we see the tech opportunity very much real for the region. There's a few data points on this slide, and I think we'll circulate the presentation afterwards. But let me just summarize, some of the key market fundamentals. I think that there are 3 drivers really that underpin the opportunity that we see. One is the region is made up of diversifying and growth economies. So the GCC very much diversifying away from hydrocarbons. Dubai has been diversifying for decades, because it never really had hydrocarbons coming out of the ground. And you've got supportive demographics, right? So 40% of the population under 25. In terms of financial services, it's a very attractive market. You're seeing significant growth, through the economic diversification that we talked about, and increased sophistication. So traditionally, there was interest in terms of the sovereign wealth funds and the institutional funds, but private wealth is becoming more sophisticated, is coming into play with capital being deployed in financial markets. And then the third limb is the digital adoption that you see in the region. The digital infrastructure supports digital solutions, particularly if you're looking at B2C solutions. So smartphone penetration, runs even higher than in Europe. We've seen tremendous growth in e-commerce over the last 2 or 3 years in the region. So you've got an environment where there's high demand, but relatively benign competitive landscape, and you're seeing this innovation come through across financial services, but also other economic sectors as well. So if you kind of start thinking, okay, you know, this region as a whole looks interesting, you know, where is my ideal, you know, location, or where is my landing point coming in? Well, I think Dubai is, you know, is a standout option for you. It's certainly, you know, built on its heritage as the commercial hub for the region. It's a global commercial hub now, with significant, you know, trade flows west to east, east to west. I think 60% of Chinese imports, you know, flow through Dubai. So hand in hand, as we've seen in other centres, hand in hand with trade goes finance. You know, we've certainly seen that over the time that, you know, the DIFC has been around. So you've got, you know, Dubai has worked very hard over the years. As I said, it's been diversifying for decades. It's worked very hard to put in the soft and hard infrastructure to support businesses, to provide the quality of lifestyle that attracts talent, and to make it as business friendly as possible. And we're seeing, you know, the fruits of that labour, you know, today and indeed going forward. And Dubai government, you know, remains very supportive. It's, you know, it's very supportive around the digital economy. It's committed to being a smart city, looking at innovation across government services, across energy and other, you know, key economic sectors, logistics, aviation, manufacturing and tourism, as well as financial services, of course. Now, just turning to the wealth landscape, because we have a sort of wealth tech focus. You know, as I mentioned, the private wealth in the region is growing and growing significantly, with you know, the double-digit growth in individuals in the region of a certain level of wealth. It's driven by those economic factors that we just touched upon. It's both domestic, local and expatriate wealth, and you're getting inward movement, inward migration of private wealth from other regions. You see, it's a global commercial hub. It's a city that's been built by entrepreneurs for entrepreneurs, and you're seeing entrepreneurs look at relocating to engage those business opportunities that are arising, and are looking for a conducive location to be based. So, say for example, I mean, Dubai has a significantly high concentration of Indian billionaires, and just for those in the UK, another example is Gavin Dean, son of David Dean, the former chairman of Arsenal. He's really recently relocated himself and his family, and has established his FinTech company in there, as well as having and maintaining a presence in the UK. So of course, this wealth that is coming in it needs to be deployed, needs to be effectively managed, transacted, and there is great appetite for international markets. So those linkages are very much there back into the UK and elsewhere. And then, you know, just again on the UAE, I mean, it's, you know, it stands out as the top market. If you drill down, you know, within the GCC, it's got a great mix of clients at the different levels and across the different segments, particularly large mass affluent segment. I mean, that reflects, you know, the local and expatriate wealth, 5 million. I mean, that's more than 50% of the population. So it's an extraordinary opportunity to engage with. And, you know, Dubai as a global city stands out as a destination that welcomes wealth and, you know, facilitates its application and its deployment. So, okay, so if we say, okay, Middle East, Africa, South Asia, then we kind of think, okay, Dubai, then we look at the DIFC, and, you know, the Dubai International Financial Centre in of itself is an unprecedented innovation that was established in 2004. I've been involved for 16 of its 17 years. It's now, you know, the largest financial professional services and tech cluster in the region. Some of the numbers, 30,000 people. So it's a It's a physical location in Dubai. You have 30,000 people, 3,000 companies, over 400 tech companies now, and 140 nationalities. It's very cosmopolitan. Although within the UAE, of course, you have a very large UK expatriate population. I think it's over 100,000 at the moment and growing. So it's an unprecedented innovation. The reason why is that we adopted international standards of law and regulation and infrastructure so that we could be attractive to regional and international firms and talent. So we have a common law, legal environment. We have the DIFC courts. We have the DFSA regulator. We have our own body of laws, DIFC laws, but they're very much closely aligned to those of England and Wales. And the cool thing about adopting international standards is that you give certainty and clarity to businesses, but you also allow business models that are created elsewhere to easily come in and be dropped into the local market. So the business model and the control environment can easily fit in. And those aspects of laws and regulations have been combined with the business-friendly aspects of attractive taxation rates, 100% ownership, and employment flexibility. So I think for wealth tech and other fintechs, what we're saying is that the DIFC solves for market, capital, and talent access. I mean, that's what we're trying to do, and we work with you, and we'll touch upon some of the ways we do that in a moment. There are other regional centres, Qatar, Bahrain, Saudi, Abu Dhabi. They tend to be a bit more domestic in nature, very sort of focused on the internal aspects. The DIFC is the largest and the most international. I mean, it's recognised as #1 in MEASA by the Global Financial Centres Index. And just to give you some evidence in terms of some of the names that are in the centre. So we do bring the market to you. That's our whole point. You have this ready-made cluster. You can see here, looking at banks. You have international banks from Europe, from North America, but also from Asia, so China, India, and indeed from the region. And many of these, particularly of the regional banks, are looking to build out their wealth offerings, and they can be, for wealth tech, a potential source of partnership, white labeling, and indeed investment. And actually, a story that I have is that I was speaking to a fintech firm that had struck a deal with HSBC in Dubai, and they said it was a lot easier to complete the transaction dealing with HSBC in Dubai than perhaps going through all the layers of management at head office. And I think that's that's another sort of probably less thought about opportunity, but it certainly manifests itself. And I think the UAE as a market is kind of like large enough to be a valid proof of concept, but small enough to be able to manage a pilot. So it kind of works very well in that sense. And just on the asset management community within the centre, you have the global asset managers, you have the wholesale distribution platforms, a good selection of private banks, and you have the alternative managers. We're actually seeing an uptick in individual portfolio managers from hedge funds looking at the DIFC as a location for their activities. So it is a ready-made cluster for wealth tech companies, and you've got $100 billion that's actively managed from the centre itself by asset managers, but also family offices, and I'll sort of touch upon that again in a moment. But overall, it's firmly established as an asset raising location. So close to $500 billion has been raised by managers and other intermediaries in the centre. Vast majority of that is allocated to international investment strategies. So those flows back into major centres like the UK. But you have an increasing amount that is looked at and managed internally. So on both sides of the equation, I think that generates opportunities. So just looking at that, immediate cluster of potential clients that you have in the DIFC, and of course it's a hub for the wider region. Everyone that's in the DIFC uses it in that way. It's not a Dubai play. It's not just a UAE play. Actually, it's a much wider play. But to get yourself started, within the center, you have this, a relatively lower hanging fruit, if you like, over 120 asset managers. Over 100 funds now have been domiciled in the DIFC, family offices, and a significant increase in foundations. We tweaked our foundation and trust laws a couple of years ago, working with David Russell QC, and that seems to have really spurred on the use of the centre in for those structures. So I think that that side of things will go from strength to strength. Another great UK success story is that actually within the DIFC we use Smart Pension, which is a UK technology firm, and it's the infrastructure through which we provide the DIFC pension arrangements, which is the first defined contribution pension scheme in the Middle East, and I see significant potential in that space going forward. And then just to give you a profile of, I sort of said 400 tech companies. This gives you a breakdown of the particular verticals. I mean, it is, 60%, over 60% of GCC tech companies sit in the DIFC. It's 6 times larger than any other cluster that you have in the region. And wealth management is well represented, right? So on the unregulated side, wealth management is 8% of the firms, and on the regulated side, it's 12%. Now, unregulated probably means, well, it does mean where you have a white label solution, where you're providing the infrastructure but not facing off to the client, etc. But I think there's tremendous potential upside on that, given the wealth flows that we've talked about. And then just to give you a flavor of, some of the tech companies that have come there. So it's across the fintech verticals, also enabling technologies. We have over 400, we think, actually. I mean, the momentum has really accelerated. I think there'll be over 1,000 by the middle of next year. It's a mix of unicorns, accelerating companies, and startups. And they've been actually tremendously successful in raising further funds from regional investors. We approximate that DIFC-based tech companies have raised in the region of $300 million over the last couple of years. And our innovation hub, that's our the DIFC's focal point for digital businesses. It offers structure, support, and co-branding. Within our innovation hub, we have FinTech Hive, which is our accelerator program. And as I said, all of it is geared up to supporting the businesses, getting engagement, structured engagement with clients, potential investors, and private and public sources of capital. So we have our own FinTech fund, which will be soon to be part of a Dubai-wide innovation fund, which does make investments ourselves, but there is obviously VC and other private capital available as well. So there are a number of low-cost, low-risk options for market entry. You've got our startup program. We have an accelerator program, and then we have incentivized innovation licenses. So really at all stages of the development cycle, there's something that could fit. And I sort of mentioned that, at the beginning, our future of finance strategy, and this is how we see it, breaking out in terms of where fintech can make a difference. And wealth tech is definitely one of the fintech verticals that we think are extremely relevant. But we also, obviously we also see the enabling technologies as being critical around digital ID, AI, cyber, and DLT as well. And on the VC side, we've taken steps to encourage VCs to be based in the DIFC or to engage the community, because we see that as very supportive for technology companies. So really, I mean, in summary, the DIFC as in essence, all we've done and what we're doing is geared up to bringing your day one revenue closer. I mean, that's the whole point about what we're trying to do. So we're trying to give market access in a low friction way in terms of cost and certainty of business environment. And we continue to look at ways that we can add value to tech companies, how we can foster engagement, both within the DIFC, but actually more broadly and with other international centres such as London, and seeing what we can do there, seeing how we can assist in talent recruitment, and in essence just facilitating that engagement with the markets for tech companies. And then just finally, just to emphasize, yes, I've talked about Dubai and Dubai International Financial Centre, but we're very much linked in with other initiatives in the UAE and the wider region. So we have a very close working relationship with the Central Bank of the UAE, for example. So we are working in a coordinated way to make the region as accessible and as attractive as possible. And I'll leave it at there. And thank you very much for your attention.
Ali, thank you so much for that set of fascinating insights, data points, and commentary. In traditional times, we'd offer a round of applause, but the good people at Microsoft have given us emojis, and everyone's welcome to use them. So thank you very much, Ali. So without further ado, over to Zaki. Zaki, welcome. Over to you.
Thank you, Jack, and thank you, Ali, because you did set the base for the future, how things has progressed in Dubai and in the region. So I'll go from your presentation to mine in terms of who is Additive. So just a few slides on who we are and what do we see the new trends in the Middle East, and then I'll jump into what we see the real future in terms of embedded finance, and that's, I would say, the future of finance in this region, not only this region, effectively, it's in the whole world. So who is Additive? Additive, we've been in the market since 1998. However, we are leaders in the digital wealth management. Even though it's 23 years, so we have all the experience, but we always innovate ourselves. There's always a new digital finance platform that we put in place to cover the future needs of the financial sectors. So we are not only experienced, but we innovate ourselves continuously to meet the future digitalization and the financial requirements. We have a quite broad ecosystem, and this is where we rely, and we always say this is how things should be done. You bring with you a really strong ecosystem and to deliver everything that is needed, and not only just one building block, whereas we go into the overall picture that is needed. And most important as well is API first. So we based our platform on APIs, and it is as a service. We use the cloud, even though we can, of course, implement it on-prem, but it is usually a cloud-based platform. So mainly these are the 3 points of when you say like, okay, I want to go to the future, I'm gonna go fast, I want to be agile. These are the main components for a fintech company to go into competition or a partnership in the future and to develop what's needed. We are based in Switzerland, and we have offices in Singapore, Germany, Kenya, UAE, and Eastern Europe. So our head office in Switzerland, we are 180 employees. And when I say innovate ourselves, this is where you see that around 80 people from our employees are in R&D. It's very important to keep innovating, to move to the next step and be leaders effectively in this digital wealth management ground. A little bit different picture of who we are as well in terms of platform. So Additive is DFS, Digital Financial Suite. This is our platform, and we have front end, the robo-advisory, the client cockpit, and the workbench. So we have a full, I would say, end-to-end offering. So we have the platform itself, we connect in the background to the core banking system, the accounting, sales and marketing, data sources, different data sources. Sustainability, we have a partnership with the Clarity AI that is right now embedded in our platform. It's part of our services for sustainability. And definitely it's what we do is our FinTech ecosystems. So we bring the best of breed from the FinTech ecosystems. We connect to all what is needed in terms of data sources, core banking system. We do all the analytics, the intelligence within our platform, and then we put all this up front to the front end through our robo-advisory and client cockpit for the clients. Our customer are B2B. We are into the B2B business, but nevertheless, the B2B, B2B2C, this is where the future is, and this is where we're gonna go to see this embedded finance, where it's gonna lead. So in a nutshell, this is who is Additive. This is our technical and platform that we are innovating continuously. The new trends, what we see in the Middle East. We have published thought leadership from Additive and concerning the 10 digital trends that will they are setting the shape of the Middle East. And one of those are really the digitally savvy of middle class. So you will see a lot of people right now that are going into the digitalization, a lot of digital savvy people. You know, regulations, as you mentioned, Ali, regulations are so important, is that, yes, regulations are so important that they are really supporting the FinTech, you know, ecosystem and providing them with more push in succeeding in this market. Efficiency, of course, the need for increased efficiency. This is one of the bank's main issues. The banks are usually the big elephant, but with support from the FinTech, then this efficiency will be quite important for them, which will lead as well to cost reduction. The increase in onshoring business, extend existing service offering. So if you see here plenty of trends that we believe they are really shaping the Middle East. There's no more, you know, just I'll give you it's not wealth management by itself. It's you need to prioritize things. You need to make sure that the customer will receive a better experience. You need to be like differentiate yourself with value propositions to gain more and more market share. Again, banks are not into anymore investing in technology rather than partnering with some FinTech in order to provide fast and agile services to their customer. This is the best-in-class solution through partner ecosystem. It's a must. It's the future. We cannot get out of it anymore. So it's here, and in year after year, it will take shape that banks and FinTechs will be working hand to hand to provide the best in breed for their end customers. As well, the way we see the segmentation here is that the high net worth and the middle class, the mass affluent, and the retail. The banks these days in the Middle East and elsewhere, they want to tackle all these different segments. They're not anymore into purely the digital private banking for the high net worth individuals. On the contrary, because there's a lot of segmentation here in the mass affluent and the retail that is not being served by the banking sector, and it's being served mainly by some fintech companies with robo-advisors only. And the way we see it, and this is where it is a push to combine forces and partner together between the banks, financial institutions, and the fintech companies, is to manage the overall segmentation here for a key success factor. So you will have from one-stop shop, one platform to provide you with the robo-advisor for the retail sector and the mass affluent. You will go into the digital hybrid approach for the middle class. And then, of course, digital private banking, it's there under one platform, and to be able to provide. And by the way, one thing very important that we need to think about it here is that there is no solution fitting all. And therefore, you will need to have the platform that being able to provide different solutions to different segmentations, to different people, allowing a satisfaction and more, again, competition into the market share. This is where this partnership between the banking and the fintech is taking place right now. If I go a little bit about embedded finance, and this is automatically what's happening of the trends, the difference in those 10 trends that we discussed shaping the future, plus the need for serving the overall segmentation of financial sectors. This is where it comes to the open banking that we see it right now. And this is where the fintech takes part of this. We see effectively that you have first movers in terms of open banking initiative stage. This is where the government support and give some new, providing some new regulations to support the financial sector. We see that Bahrain was effectively leading that in 2018, but as right now, UAE as well in the front into shaping this open banking initiative, shaping the legislation and regulations to support the fintech providers, as you mentioned, Ali, there. And this is where you see that the banking sector, they have the large customer base. They are trusted by their customers. However, what the need is this with the open banking, with those APIs, is this relationship, this partnership with the fintech providers. It's the fintech will be providing the innovation solutions, low cost. They are really agile with low cost, speed, as I mentioned, and they can personalize the services that fits the banks and their customers' need. With that, the results, it's automatically customer satisfaction, new revenue. It could enhance as well the customer confidence. So those customers will stick to this bank. There will be much more and more stickiness to the bank. It's a win-win situation for the bank, for the fintech providers, and for the end customers in the wealth management arena. It's very important to say, like, I mean, what is this? What is the embedded finance? It is really a fintech disruption. We started with the internet banking, beginning of the 2000s. Then we jumped to the digital banking between 2010 to 20. So this is like leveraging technology in specific. But right now, we see this embedded finance as a phase 3 in the fintech disruption when you bring in new services as part of existing. So we are not talking about IT, we're not talking about finance, we're talking about what the customer needs, the context awareness. And this is the customer journey that we need to look at, and we need to evaluate and propose to him what suits him and what fits his requirements. So this is where we say that putting the financial service into channels with higher engagement. So we follow the customer, where the customer is, what is relevant to them, and what do they need it. So we adapt to what the customer needs. And this is where the financial services will take place into using the different level of engagement with social media, retail, health and wealth, all into one addressable market. And it's quite a huge market that it will not be ignored. And this is very important as well for the financial institutions to look into that and make sure that they need to jump, on this boat as soon as possible, because it's a market, open market for anyone, and whoever comes first will take the lead on that. A little bit, I mean, it's a slide that has a lot of information here, but just out of this is that we go away from the transactional rails and we go into some intelligent services through embedded journeys. So it's not anymore like you want a credit card, take a credit card. This is the traditional business here, like Visa, MasterCard, Swift, and others. Right now, we need to go to an intelligent service. What is the customer need? And we provide him with a full journey. One of the small example, buy a house. So he can find, buy, and protect his house through only one click through a financial institution or through his agent. So making life easier, making sure that we embed all the financial data and what we need, the outcome, into one click to serve the customer journey, depending on the customer contacts. So this is very important. And why now? We always ask what is coming now, because it's a market inflection point, as we say. It's between the customer satisfaction and the technology that based on API, so it's easy for service interaction. Regulation, legislation, as mentioned, are being quite supportive to the fintech and to the new ideas of doing business. And the competition, it's all very straightforward, I would say, compelling events to go into this embedded finance to grab this huge market that we are talking about. And it is here, and it's really, it's going to be addressed in the coming 5 years. So we have to go very fast. And this is where additiv, we have the embedded wealth orchestration platform deliver end-to-end service. We anticipated this. We are already doing this in Europe. And we believe that the Middle East future will as well grow based on this. So as I mentioned, we develop ourselves, we develop our platform continuously. We lead this digital wealth management sector. We like to believe in that, and we are there. And we are as well planning the future already with the embedded wealth orchestration platform, allowing a bridge between the customer needs and the growth of the financial institutions. By this, I will end my presentation. for the sake of time, and I'll leave the floor to you, Jack.
Zaki, thank you so much for that very comprehensive introduction to additive and your incredibly thorough analysis of the themes involved. Can I ask everyone to whiz straight to that emoji to give Zaki a round of applause, and then hand over to Gillian Painter, who's going to moderate the Q&A and then wrap up the session. Thank you very much, everybody.
Thank you.
Great, thank you, Jack. Ali, if I could ask you to come back on camera, that would be fantastic. Great, good to see you again, and thank you both. It's been really interesting to hear about the opportunities in Dubai and DIFC's model to support tech and innovation, as well as hearing directly from a wealth tech. So thank you both for that. As Jack mentioned, I'm Jill Painter, Head of Engine, the Investment Association's FinTech Hub and Accelerator. And it was 3 years ago we actually launched Engine. And I'm delighted that we've built such a strong relationship with DIFC, who are an important really important partner within our Global Partners Programme. And today's Q&A session will, I'm sure, answer quite a few questions in terms of what it's like to set up in Dubai. We have had some sent through, but if you do have any others, then please do use the chat function. As we've mentioned, it's always good to be as discursive as possible. So I think, Ali, if I could just start with you, engaging with agile fintechs offers huge advantages for the investment management community, but what makes Dubai attractive for fintechs to set up and actually grow? And also what makes DIFC stand out as a hub in the Middle East?
Yeah, thanks, Jill. I mean, I think I sort of covered, some of the main points in my presentation, but I think that, if you look at the nature of the city, Dubai is a global city. It is the center of trade. It is the center of finance. So, within that, like you have London, New York, Tokyo, these global cities naturally, because of their attributes, support businesses, through the environment that they offer. And I think Dubai is of that same nature. And the DIFC, I think it's really about that adherence to international standards and the long-term commitment that's in place. So it has a 17-year track record, as I mentioned. The regulations have been tried and tested, and there is a commitment to continue to innovate in relation to regulations to adapt to the new solutions that are coming through. I think regulators have got a very important role to play, because if they don't regulate, then you sort of increase risks in a way. Whereas if regulators put in regulation, then consumers, investors, and firms are operating in a better environment.
I couldn't agree more, and it really is testament to the efforts of DIFC that Dubai now firmly sits in the top 10 financial centres, alongside the likes of London, Singapore, Hong Kong, and of course New York. But Zaki, it'd be really interesting to hear from you. Additiv has offices in Europe, Singapore, and of course Dubai. And as mentioned, there certainly would seem to be significant opportunity in the wealth tech space, with some impressive incentives. But what were the factors that you considered in choosing Dubai as your location, and what would be your advice for fintechs setting up in region?
Effectively, we've been trying to do business for the last 2 years remotely. And we engaged with multiple financial institutions in Dubai and the Gulf itself. We found out that Dubai, as mentioned again by Ali, they have the world-class infrastructure. So it's the international trade hub. It was very obvious from everyone we have discussed with that this is where we should be, and this is where we should be locally present and develop our business and grow it from here. Luckily, we were introduced as well to DIFC, whom I have to admit that everything was done digitally. And I was very much impressed, myself, my colleagues in the head office in Zurich, is that everything was done digitally, from information gathering to registering the company to making sure renting an office in the IFC. So the whole setup was done perfectly in no time, digitally. And that's, I would say, it's enough for all fintechs to be part of this experience.
That's great, and really pleasing to hear, particularly in the world that we now live in. I've just got a question in from one of our attendees today, to both of you actually, asking, what do you see as the main challenges for fintech firms looking to establish a presence in the region? Ali, I'll go to you first on that one.
Yeah, I mean, I think that I mean, the main challenge is where do you start, right? Or how do I generate? The often question I have is, you know, how do I generate those interactions with financial services institutions? Can we have introductions? That type of thing. And you know, ultimately, you know, as Zaki has pointed out, I think that, you know, our position is, if you're embedded in the geography, in the location, then you know, you will gain traction. But we realise that people have this chicken and egg situation where they want to see revenue before they commit. And our point is, you know, if you commit to the region, you will see revenue. But we try to support that, you know. So, you know, I personally say to people, look, you know, have a, conduct a reconnaissance visit. Go to the region 2 or 3 times. You know, we will try to facilitate your engagement, you know, at an introductory level with the, with the community. So, you know, take your time, and you know, revenue is very important, but you know, you've got to go about it the right way if you want to see it.
Great. And Zaki?
I mean, I cannot agree more with you, Ali. Probably one comment here is that my advice, go ahead and do it. From experience, the support that I've got from the IFC is exceptional. And once you take the decision, you go ahead and do it. All what you need to do, take the decision, move in, and I believe the market is big enough for the fintech, as many as possible. Huh? so just take the decision and move on.
And I like that. Just go ahead and do it. I think sometimes that is the best way. But going ahead and doing it, there are some practicalities to consider. And Ali, thinking about the legalities of setting up in Dubai, what legal forms can a company presence take? And, you know, what are the benefits and drawbacks of doing that?
You have full flexibility, Jill, on you know, what legal form your presence can take. So you can set up a branch of an existing UK entity, so that, you know, that's a very quick way of doing it, and you can rely on the corporate governance structures, for example, that are set up at head office already. You can set up a subsidiary, you know, of a UK entity. Or you can you know, set up a standalone entity. The advantages of the latter two is that you have a bona fide balance sheet in the centre, and you know, you can book revenue you know, more transparently in the centre, and avail yourself of the taxation, the corporate taxation rates there. So I think that you know, those options are available. In terms of the innovation licenses that we have, you can they can be unregulated for that pre-launch phase as well. So you know, ultimately you may need regulation, but you can also establish pre-launch to set up you know, market engagement, to have, you know, the discussions with banks at a sort of generic level. So, you know, those are the options, and happy to go into further detail subsequently.
No, that's great. And there are plenty more questions that we could ask. I've got hundreds myself, but I think we're actually running out of time, which is a bit of a shame. But I will just ask for one very simple piece of advice that you would offer Fintechs. Zaki, one-liner.
Well, as I mentioned, the market is big, the business is here. Just take the decision, move in, and success awaits it.
So go for it.
Yes.
That's your advice. I like that. Ali?
Yeah, I agree with that, and we're here to support you all the way. You know, before and you know, whilst you're setting up and afterwards.
Great. Thank you both so much for answering just a few questions there. If anybody does have any further questions they'd like to ask, please don't hesitate to reach out either to myself or indeed any of the speakers today. And thank you, Ali, thank you, Zaki, and thank you, Jack and Mariam, and everybody for a really insightful webinar today. Take care.
Thanks a lot, Jill.
Thanks.
Take care,
Bye.
everyone. Bye. Bye.